All right, so welcome to another video. Today, what we're going to do is we're going to take a look at 3 popular stocks that I would not buy right now, especially in this kind of market and condition. So stay tuned. Keep in mind, none of these are recommendations to buy, sell, or trade anything, just my own opinion. And you can grab my opinion on the website as well. There's a lot of great classes I have coming up, especially on options. Or if you want to work with me one-on-one, check out the coaching session with single one-on-one and 2, 3, 5 weeks of coaching if you like, and get together to work on your trading. All right, let's get started. We're going to go ahead and take a look at these 3 stocks, and I'll tell you some personal concepts on these stocks. You can also see some of the charts that I post on the Discord channel if you like. So it's similar concept to what I'm going to be going over right now today. But the first one is SoFi. Okay, SoFi Technologies here. One of the reasons why I won't is it's a fairly new stock for one, and it's just had struggle right here at the overhead supply. There's a lot of problems overhead, and then the stock kind of chopped around for a little while. I get the story. I get, people are interested in the stories. But for me, the price action and trend is kind of the key. If it's moving in an upward direction, if it's got some momentum behind it, it's going to have funding. It's going to have big boys coming in, and that is key. Now, we haven't had that in the stock, and in fact, it's gone below the IPO here under the $10 mark. Stocks under the $10 mark, there's certain hedge funds that are not even allowed to buy that stock once it reaches a certain level. So under $10 makes it more difficult for them to purchase. So it means it's even more difficult to push that stock now higher. So that's kind of one thing. Next thing is, right now we're starting to get a little turnaround in this stock, you could say. If you're looking at kind of this trend right here, you're starting to see a little bit of the sideways action, but it's still overall kind of moving in this downward action. So if you're starting to see this level of resistance, we've got levels of resistance all at these points. And if we can start seeing some of this, what we've been seeing just recently, the last month, this sideways behavior, that's pretty good. But we did have a little flush down. So that could actually be, hey, it's kind of basing somewhere. That was right around the $5 mark. So, okay, so if we can get a push higher here, then I could say, okay, maybe it's starting to get into some possibility, but it's not one I would really get into. You could get into the story, the earnings, you could get into what's possible in the future. But once this gets going, if it's really a true play or win, and that goes along with any of these stocks that we'll be talking about here soon, you'll see the trend going, not just for a few days or weeks. You're not going to miss it. Once it starts turning around, and if the stock gets above $10, and if a true winner, it'll keep going. It'll keep retesting. It'll keep going in this direction. And then that's fine. You'll have plenty of time. In fact, they'll probably even break these levels as well. So you'll have time to get in. You don't need to chase it as it continues to drop and go down. So that's why I wouldn't, chase it right now at this point. The other one is Nio. If you take a look at this stock, it made a huge move back in 2020 and pushed higher right there. We had a nice breakout after the IPO over here in 2018, had a breakout at that price point, and the stock continued to push into some higher levels. Unfortunately, we topped out around that $50 mark. And then that stock kind of went sideways here in this triangle pattern, which is usually a continuation pattern, actually. And then could go there. So, for example, it'd go up, base here, and then continue there. But we didn't do that. The volume started to dry up. You can see that right there, the volume drying up at that spot. And then it just started to kind of roll over along with the rest of the market. So it's not as sustainable. So I wouldn't chase it. There is a gap right here when you start looking at this stock. There's a little bit of gap zone. And this is kind of what I would watch for a possible basing pattern here. So it's coming into here. So I wouldn't really get into it right now until this volume starts picking up and starts turning around. So again, wait for a little bit of a base here. See if that'll hold. You might fill this gap right there as well. And then maybe after that, that could be a better buy or better opportunity. You also have earnings coming up right here, 6/9. So that's pretty recent and coming up. So I'd be a little bit more cautious of that. Third one, AMC. So similar to many other stocks out there, these were high flyers. So this one moved very quickly off of a double bottom over here. When you look at it from 2020, 21 with the Reddit groups and, group buys, and then the stock really just exploded higher very quickly to about a $50 per share. So it did quite well and moved nicely if you were able to catch the bid up. Unfortunately, the stock hasn't done quite well recently. It's been pulling back, and the trend continues to be on this downward cycle. So if you're kind of just watching this move on this trend, it just continues to move downward. So it's not really positive there in my book. The other thing I would watch is, look, it's coming right into this $10 mark. If this $10 mark breaks, it's going to be trouble. However, if you're looking to nibble, this $10 is the key, and you're right around, like, basing around the support level. But why would I bother or waste my time with it right now? High volatility means higher risk. It's not really one I got to chase. There's plenty of other things out there. Here's the other thing to watch. Here's the other support and resistance level right here that I would watch. If you're looking at this stock, there's a good entry point. If it breaks here, you could kind of get into that spot if you'd like, and then take some insight there. And then 30 is another spot if you really are interested in it. Other than that, it's a movie theater. Most movie theater, entertainment holdings, whatever you want to call it. Most of them are not at this price point or this valuation. So I'm not saying you got to know and understand how to value multi-billion-dollar companies or anything, but most of them are not trading at these stock prices. So chances are it's not, going to be at that level either. So that's why this one just continues to trend lower. Just people, eventually with time slowly dumping, liquidating the move. It's kind of, the move is already done, right? The news has already happened. The story was a year or two ago already. So you're getting into that early 2021 where the move actually happened. Now you're getting into 2022. So, that news is done. It's like trading off of the tulips back in the day, or, trading off of steamboats and railroad companies back in the day. So it's not to say you can't do it, but for that, we've got CSX Railroad Company, right? So you're not trying to do trade based off of old news and stuff. So anyway, so those are kind of the three main ones that just say, hey, look, they're popular, but it's not ones I'd get in. GME is an interesting one. This is a bonus one I'll talk about for a second. This one kind of held and sustained itself a little bit more. So it did get into this 88, trying to hold the $100 price level. So if you're starting to look at this price point of around this 100, it's starting to pick up some speed again right now. But it's trying to base around that 85 and start holding for most of the year so far. So I wonder if people are just really into this right now and holding this stock, but it's not one I would really get into. I wouldn't mind doing a trade only, putting a handful of dollars here to do a trade here or there, but it's not one I would do like full-fledged a long investment on. But it is an interesting one because it's holding price points and price levels, and there's quite a bit of premium in there that's involved. So it's not a bad one to trade, but from an investment standpoint, I'd be a little bit more careful on it. Anyway, those are kind of my takes on some stocks that I probably wouldn't deal with or trade. You could go ahead, look at their earnings, look at the story, but at the end of the day, it comes down to like, look, how long are you going to be an investor for in these things? Are you going to be doing it as a trade only, or are you doing it as a long-term investor? So for you, your outlook might be different. That's totally okay. You might see things, hey, this is fine for the next 3 months. This is fine for the next month or two. No problem, because you have the luxury of deciding if you want to be in that trade for 2 weeks, 2 months, or 2 years. And in that case, your decision or thought process might be different. You might love these stocks. So everybody's different. They look at things a little differently, and that's what makes things very interesting and fascinating when it comes to investing or trading. So thanks for joining me. Enjoy the rest of the week ahead, and I will see you in the next video update.